Holy F. This is very scary. So, what exactly do we have to worry about with stocks this week? Because this is a big problem. Yes, it's an $18 trillion problem, or the rally that are now going to have to face potentially their final boss or Jerome Powell. What does that mean? Because right now, you're sounding a little bit bearish. That's right. We're getting bearish evidence. We've printed a weekly lower low, and we're currently below it. So, what does that mean? It means stocks might have to go down further. Remember, we've been talking about this crash template on our daily chart. And as of right now, it's playing out. All right, tell me about Jerome. That's why I'm here. That's why I clicked. All right. So right now, stocks rallied by $18 trillion. That's a lot. And what's very scary is that as stocks have just started to go down, now the global bond market has a tantrum and it is wrenching and worrisome to start off the new year. That's Jerome Powell. That's what's scary. To go with that, China stocks grapple with the gloom in their worst year since 2016. Ouchie. And they're entering into a bear market. Ouch. Who could be next? Well, history is foreshadowing the worst of times for the markets. Oh, yes. What does that mean? Hey, is 2025 going to be 1929, 1989, early 2000, or 2008? Take your pick. That's right. Are stocks about to crash? Well, that's kind of what they're talking about here. I want to show you one template here as well, because as we look forward here to which is XLV, what do we note? Well, it's pretty obvious. We're back testing the previous all-time high, and if we don't hold here, that could lead to a bigger stock market crash. Let me show you the weekly chart here as well, because this is kind of what the S&P looks like it's going to do. Crash line on the 50 MA, bounce, lose it, dead cat bounce, test the 200 weekly. All right, let's look at SPY now. Where is that? Oh my God, that's like a lot lower. Yes. That's why I'm saying that if stocks continue to go down, like we could easily hit this 50 MA and see what happens here. In hindsight, like I've shown before, that could be your head and shoulders, knees and toes. Let's be very mindful of that. All right, so you're telling me it could be a massive stock market crash. Yes, we're currently in fear. Please make sure you watch all the way until the end, because I will leave you with some key takeaways. Right now, short sellers are betting against the market. Cool. And this is the data point that I wanted to leave you with here. So on Tuesday and Wednesday, but specifically on Wednesday, when we look here to these numbers, we're looking at CPI on a year over year, which is going to go up to 2.9% on a headline. That's bad. Why? It's closer to 3. And this means that the Fed might have to be worried about inflation a bit more. That's basically the thing you need to look at here. China's going to grow a little bit more at 5%. Great for China, but they're in the dumpster. And what happens on January 20th? That's right, at the end of this week. That's right. Well, the big Don, he becomes president. And he's got some legislative priorities: immigration and border control, energy and domestic drilling, and tax cuts. Okay. So that's going to be in focus. And he also wants to meet with this other guy over here, right? Wants to happen fast. Got to end the war. That's right. Good. He's also looking at Greenland, right? A lot lately. Why? They got some critical minerals. Lithium, rare earths, graphite, copper. Hey, this all sounds very familiar. And they also got oil reserves. All right, so stocks drop after worst report shows U.S. labor market is hot. What does that mean? The job market. So job market's hot. And now that we have a really hot inflation print potentially coming in this week, this is where the update to the 10-year note, which I said was the very scary thing last time. Well, let's have a look here, because right now the U.S. 10-year note, U.S. 10-year, where are we? 4.76. That's right. We've actually broken out. I said, oh my God, I'm concerned if we get above 4.1, 4.2. And that's what the video talked about. Well, now we're all the way up here at 4.76. That's right. As the Fed keeps cutting, the bond rate keeps going up. That's very unusual. That is very unusual. It feels like it's 1995 here, where the Fed's going sideways, and that's kind of what we're doing right now. But there was always a crash after. So it's a matter of when, before or after the big dawn. I'm going to ask you for a huge favor. If you could please consider smashing the thumbs up or subscribing to the channel. Thank you very much ahead of time. So looking here to the other country, they're going to be proactive. That's exactly what we want to do with our accounts as well. If yields are really going to go to 4.7%, maybe even 5, maybe even higher, we have to be mindful of that. All right, here's the notes for this week. Thank you for bearing with me. Pause the video if you want, or you can sign up for a 45-day free trial and come see all the stuff for yourself. We're bearish until proven otherwise. That's very simple. All right. The monthly currently has a bearish engulfing candle. Failed breakout, which we had near the top here as well. Then we went all the way down to the blue line. Where is that? Same thing I just showed you on the weekly chart for XLV. It's 450. Where is that? It's a lot lower. Yep. And the daily chart here shows us that if we're going to get the crash, it could be starting to accelerate here. So by closing at or near the low of the week for the S&P, it's actually a bearish engulfing candle closing below the low. I forgot to note that. My apologies. That's a bearish engulfing candle. All right. NVIDIA is looking more like a top. That's our update. Yes, we were above the 50. Now there's no coffee here. We're slamming down. We're on strong support. Let's see if it holds. That's NVIDIA. For QQQ this week, that's right. QQQ here, we're now currently at number 3. We've not actually closed below the low. It's within a whisker here. It's like within $1. So below 503 starts to get dicey. Why? We could lose 10% pretty fast. Right back down here to roughly 470, which would be our uptrend and also our blue line. All right. On the monthly chart, we're already below our previous low, right? That's right here at 510, already below it. And on the daily chart, we finally got to close below the 50-day moving average. That's our first candle close below there. Ooh, things don't look so good, Big Don. Oh, no. Somebody very close to what? Become a president. They're going to be hired. You were hired. That's right. Tariffs, fat cats, and Trump. In which order? Hey, we're going to find out. Whew, well, it's going to be spicy 4 years. That's all I know. Over here, you can see Zuckerberg kissing the ring as well. What is he doing? He's telling us that we need more masculine energy in the workforce, right? Rogan interview is the latest sign of the shift. Again, I have to be mindful of what I see on YouTube too, because they've not made the shift. Can't say that word. Can't say a lot of words. Thank you, Zuck. All right. Now here's the notes for this week. Here's the recap. So leading into the technical analysis for this week, we're currently sitting at 0 out of 4 or fully bearish, in case you didn't see that. We're sitting at 27 in fear and greed. And we got CPI in the 15th. Already talked about that. TikTok deadline ban. That's going to be on the 19th. And then Trump becomes president on the 20th. That's right. We're not like Scott Bessent, who currently has more than $521 million. He's going to be the Treasury Secretary. And you don't want to be disappointed. Well, please be mindful that you're living in the West, right? The Western countries. It's best over here. This guy's not doing so hot. The U.S. economy is still doing really, really good, sitting here at 2.7%. So if now we think about where stocks could go from here, well, remember, everyone's joking about how America #1, baby, right? Who are we going to take out next? Panama Canal, Greenland, Canada. Well, if America's #1 and the best country in the world goes on sale, what should you want to do? You should want to buy that dip. So grab your chips and figure out what kind of dip you like. Do you like it spicy? Do you like it a little bit? Do you like a little bit of spice, mild? Or do you like it just kosher? All right, if you want to come hang out with me beyond what you're watching right now, 45 free days, you can go to theelgo.com. If not, thank you very much for tuning in. I'll see you on the next video.